Every time that you go out and you swipe your debit card instead of your credit card, you're throwing free money away. Last year, I earned over $3,000 in rewards just by changing the piece of plastic that I used. But that is not even the biggest benefit. What is up, everybody? I'm Rashida. I'm your guide to smart money moves. I started investing at the age of 17. I've become a millionaire on a police officer salary, and I'm going to show you how you can get there too. In today's video, we are going to be diving into something that might completely change how you think about building wealth, and that's going to be through credit cards. Now, I get it. I completely get it. Credit cards have a bad reputation, and maybe you've heard horror stories from your friends or your family members about credit cards. Maybe you've been told they're dangerous or that cash is king. But here's the thing. While everyone else is scared of using credit cards, the wealthy are actually using them to build massive wealth. And we're going to take a look at this. And so in today's video, we're going to be taking a look at how credit cards are actually crucial to you building your wealth, how good credit is going to help you save hundreds of thousands of dollars on major purchases, the real reason that people fear debt and how to overcome it, how to earn thousands of dollars in credit card perks without paying a dime in interest. And I'm going to show you exactly how to go about optimizing your credit card strategy for maximum benefit. Plus, if you stick around to the end, I'm going to show you my exact credit card strategy that I use to earn thousands of dollars in rewards every single year. Now, before I show you how I earned those rewards, let me share something that really shocked me the first time I discovered it. And so remember how I mentioned that reward money isn't even the biggest benefit? Here's why I said that. So let's look at two people buying a house. Let's say they're both buying a house for the purchase price of $400,000. Now let's start with Liz. She has excellent credit from responsible credit card use, and she's going to be able to get her loan at an interest rate of 6.5%. Now, her monthly payment is going to be right around $2,500, and the total amount that she's going to pay for that mortgage over 30 years is going to be $910,000. Now, if we go over and look at Mike, he completely avoided credit cards based on all of the fear stories that he's heard over the years. He has poor credit because he never used any of his credit. If he gets approved for an interest rate, it's going to be around 8.5%. Now, his monthly payment is going to be just over $3,000 a month, which means that the total amount he's going to pay on his loan over 30 years is going to be $1.1 million. And so the difference of what Elizabeth and Mike will pay for that same house is going to be $200,000 over the life of that loan, not to mention the $3,000 that Elizabeth is going to earn in her rewards every single year. And so here's something else that might surprise you. I have never personally met anyone with a net worth of over $1 million that does not use a credit card. 65% of them put every possible purchase on their credit card, and 93% of them have credit scores of over 750. And why is this? It's because they understand something that is crucial. Credit cards aren't about borrowing money. They're about building credit and getting paid to spend money that you were already going to spend anyway. And so let me share a little personal story with you. When I first started on my financial journey many years ago, I was terrified of credit cards. Throughout my childhood, I watched my parents cut them up at the kitchen table before telling me that they're nothing but trouble. But I noticed something interesting as I was working in the finance industry while in college. All of the wealthy clients used credit cards, and they didn't just use them, they used them a lot. So why are so many people scared of credit cards? It's not actually about the credit cards themselves. It's about feeling out of control. And the media doesn't help with this. Turn on any financial news channel and you're sure to hear horror stories about credit card debt ruining people's lives. But here's what they don't tell you. It's not about the credit cards that cause the problem. It's about not having a system and sticking to it. And so think about credit cards like being a power tool. In skilled hands, it can be incredibly useful, but in careless hands, it's going to be extremely dangerous. And so the solution isn't to avoid credit cards, it's going to be to learn how to use them properly and to your benefit. And so let's take a look at some numbers. 60% of Americans actually fear debt more than death. Yet 78% of millionaires use credit cards for their everyday purchases. The difference is going to be a system for using them responsibly. And so let's talk about those rewards that I mentioned earlier. This year, I have earned over $3,000 just by using the right credit card for the right purchases. I used that money to treat my family to a trip to Disney, and it was amazing. Now that's a trip that's very expensive, and I may have considered not even doing it if I didn't have that rewards money. The best part is I didn't spend any extra money to do it. I just changed which type of plastic I pulled out of my wallet. And so here's what a lot of people don't realize about credit card rewards. So first, you have your basic cashback cards, okay? Most decent cards are going to offer between 1 to 2% cash back on everything that you buy. And so think about that. Everything that you buy on a daily basis, from your groceries to your gas to your Netflix, could be earning you money back. Then you've got your bonus categories, and some cards are going to offer 3, 4, even 5% on things like restaurants, travel, gas, groceries, online shopping. Things like travel insurance can save you thousands if your flight or your trip has to get canceled for any reason. Extended warranties on electronics and appliances will save you money, so you don't have to buy that in the store. And of course, you've got rental car insurance that the rental car companies love to charge you a fortune for. And a lot of credit card companies are going to offer purchase protection if something you buy gets damaged or stolen. And some of the nicer cards are gonna actually offer airport lounge access when you're traveling, which is pretty nice. Now, let me share with you the exact strategy that I use to maximize my rewards. This is going to be called the Chase Trifecta, and it's one of the most powerful reward combinations available. The first one is going to be the Chase Sapphire Reserve, or the Preferred. This is going to be your premium travel card, okay? You're going to earn 3 times points on travel and dining. They're going to give you a $300 annual travel credit. You're going to get priority pass lounge access when you go to the airport, and your points are going to be worth 50% more when you use them for travel. Now, both of these cards come with an annual fee, but I'm here to tell you from my own experience that the benefits definitely outweigh that annual fee that you're going to pay. Next up on the list is going to be the Chase Freedom Unlimited. Now, this card is going to give you 1.5% cash back on every purchase. You've got no annual fee associated with this card. You're going to get 3% back on dining, 3% back on your drugstore purchases, and it's going to be perfect for your everyday spending. And then last but not least, you're going to have the Chase Freedom Flex card. This card gives you 5% cash back on rotating categories each quarter. No annual fee with this card, and you're going to get 3% cash back on dining and 3% cash back on those drugstore purchases. And now here is where the magic lies in the trifecta. All of the points that you earn on these cards can be combined and transferred over to your Chase Sapphire Reserve, where they are worth 50% more for travel. That means that your 1.5% becomes 2.5%, and your 5% becomes 7.5% when you use it for travel. Now, I know all that is exciting, and I would not be doing my job if I didn't talk about the real risks associated with credit cards. Because yes, credit cards can be dangerous if you don't use them correctly. And so let's take a look at the 3 biggest pitfalls when it comes to credit card usage. First, those interest rates are no joke. As we all know, we're talking between 15 to 25% APR and sometimes higher depending on your credit score. That means that a $1,000 balance could cost you an extra $250 a year just in interest. That's why the number one rule when it comes to credit cards is to never carry a balance. Never. Because if you do, all of these rewards and things that you're earning, it's not going to amount to anything if you are constantly paying these high interest rates. You will lose on the back end. And second is going to be late payment fees. Missing a single payment by even a day on your credit card is going to cost you between $35, $40, and even worse, is going to ding your credit score, which we know will cost you money. So one missed payment can wipe out months of those rewards that you've earned. And the third pitfall is going to be a very sneaky one because it is a psychological one, okay? Credit cards make it really, really easy to spend money because when you're swiping plastic instead of handing over cash or using your debit card, you're going to feel that purchase less. This is the entire reason why casinos use chips instead of real money, because it disconnects you from what you're actually spending. Now, this is where most credit card videos end, but I'm going to share something crucial with you that nobody likes to talk about, and that is your emergency fund, because your emergency fund is going to be your credit card insurance policy. And so here's why it matters. Most people get into credit card trouble when life throws them a curveball. Their car breaks down, they have medical bills, they lose their job. And so without anything in savings, the credit card becomes their emergency fund. And that's when huge trouble can start and it can wreck your finances. And so I like people to understand that before you even think about maxing credit card rewards, you need to build up 3 to 6 months of expenses in your emergency fund. It's going to be crucial. It's going to save your behind one day. And so now let's take a look at a breakdown of what your credit score means in simple terms. You can think about your credit score like a financial report card, but this report card is going to follow you long after school ends, okay? Now that score is going to be made up of 5 factors. Your payment history is major. That's going to make up 35% of your credit score, and it's basically going to be assessing, do you pay your bills on time? Next is going to be credit card utilization. That's going to be 30% of your score, and that basically looks at how much of your available credit are you using. Then we're going to have the length of your credit history, which makes up 15%. And all that takes into account is how long you have been using credit. Next is going to be your length of credit history, which makes up 15% of your score. And that takes a look at how long you have had credit. And then new credit is going to be 10% of your score, and that looks at how many new accounts you have opened recently. And then there's going to be one more called the credit mix, which is 10% of your score, and that looks at the different types of credit that you have. So that can be, do they have credit card, mortgage, student loans, personal loans, things of that nature. It's good to have a good mix, not just one, because it shows that you have the ability to be dynamic in the type of debt that you take on and your ability to pay back all of those things. Now, if you're someone that would like to have access to your credit report, you are actually entitled to pull your credit report 2 times for free at annualcreditreport.com. And this isn't one of those sketchy free sites that make you enter some of your credit card information or make you pay anything. This is the official site mandated by federal law, so there are no strings attached. You can look at your credit history and get your credit report, again, twice a year, free of charge. And I recommend that everyone do this twice a year so that you can just put your eyes on everything, make sure everything is accurate for one thing, and you can address any issues earlier rather than later. If you think you may have trouble remembering to do this, just set a reminder in your phone now. Set it up for every 6 months, so hey, you can get an alert, check that. Make sure there are no inaccuracies. Make sure there's no suspicious activity, because some things could be dragging your score down but you don't realize it because you never take a look at your report. Now, I'm going to be completely honest with you guys. Despite everything I've shared today, it's going to be a fact that credit cards are not for everybody, and that's okay. And so if any of these sound like you may want to hold off on credit cards for now. If you are someone that struggles with impulse spending, if you are still working on building basic money management habits, if you are currently dealing with other debt, or if you don't make a steady income, if any of these things apply to you, hold off, shift your focus on taking care of these issues, and then consider using credit cards, because there is no shame in using a debit card while you work on building better financial habits. Remember, credit cards are just a tool, they're not a magic wand, and the best strategy is going to be one that you can stick to consistently. And so now let's put it all together in one simple system that anyone can follow. Step one, obviously, is going to build that emergency fund. This is your foundation. It ensures that you don't get into trouble down the road. Step two is to get a simple cashback card to start. Don't even worry about maximizing rewards yet. Just focus on building good habits. Step three is going to be to set up automatic payments to pay off your balance in full every single month, no matter what. Never settle for carrying a balance and paying the minimum. Now, step four is going to be to keep your credit utilization under 30%. So this means, for example, if your limit is $10,000, never use more than $3,000 on that credit card, because remember, this impacts your credit score. And step five is going to be to track your spending, okay? Most credit cards have some sort of app for this now. Use them, all right? If you want one that's really great, I recommend Rocket Money. It is great for tracking expenses, budgeting, things of that nature. I put a link down in the description for you guys to check it out. And so here's the bottom line. Credit cards are like power tools. Again, in skilled hands, they can really help you build something amazing. Great use of them over years will save you hundreds of thousands of dollars over your lifetime. You can invest that money and really set yourself on a path to building wealth. In careless hands, they can cause serious damage, so take it seriously. The difference isn't in the tool, it's how you use it. And so if you don't take anything else from this video, know that your credit card will impact your wealth more than just about any investment that you will ever make. If you found this video helpful, please consider subscribing to the channel so that you can get more practical advice. We put out a video every single week. Drop a comment below. Let me know which credit card you use, which one you think is best and has the best rewards program. And if you have any questions about how to use your credit cards responsibly, put it in the comment section. I'll get back to you. And if you're someone that wants to learn more about the smart way to build wealth, check out my video on the most powerful way to think about budgeting. I'll leave it up here for you. I'll leave a link in the description. And so until next time, guys, I'm Rashida. I'm helping you to make smart money moves. I will see you guys on the next one. I'm out.